Hey everybody, and welcome back to another video. In today's video, we discuss everything to do with the stock, crypto, and commodities markets right now, including the base that is forming on this stock market and where the next levels could be. We saw the small bounce, we're in a coiling session, and you know what happens after that? Generally, a bit of an explosive move. So get strapped in because we're ready to go through some key levels that you should be looking at right now. See you soon. All right, everyone, well, welcome back to our market recap here for the 8th of February 2022 in terms of the close. If you enjoy everything to do with the stock, crypto, and commodities markets, our daily show covers it all. So please remember to subscribe and smash that like button if you do enjoy it. Let's take a look here at the heat map of the SP 500. We'll be going through some of the stocks here and some of the key ones that we like and the sectors a little bit later. But it was actually a day of energy declining and most people picking up a mixture of different stocks. Now let's take a look at what happened through the session. We know that the first hour is generally retail and the market sold off and sold straight into supports, and then it did a turnaround story. So for most of the day, there was actually rallying, and there was rallying into the close, which is different from the previous day where we saw a bit of a sell-off into the close. Support was made, the market moved back up, and it hit a small resistance near the end. But I think where the interesting component is really when we start to look at the sectors. Now, we've been a bit of a component here on the channel. In January, we brought up the idea that jets, which is of course airplane companies, were doing better and they looked like they were turning around as a sector. Today was an explosive move for them, 4.12%, and that's off the back of another 3% move. So it's clear that while the markets are showing signs of weakness in certain growth stocks and certain stocks that are maybe a little bit more susceptible to interest rates, we're seeing a bit of a move here where jets, financials, materials, some of the other sectors are doing better. It was actually energy that did the worst, and that's off the back of course, oil hitting 92. That was a key resistance, and we knew it as a community. We'll look at that a little bit later. So earnings continues here. We have things like Walt Disney on Wednesday, finally some decently large earnings coming through. Uber, Twilio, this will be a bit of a one maybe for some of the hyper stocks, see how they're going. And then on Thursday, we have Twitter, Coke, Pepsi, Datadog, Cloudflare after the hours. There's going to be quite a lot of nice middle tier to large tier companies coming out with earnings. And this is kind of what I feel like the market needs, because if we don't have this, then we're going to be in this coiling range for a long time. But as we know, explosive moves can happen outside of coils or outside of tight ranges. Let's talk about our longer term approach here. A lot of people always ask, oh, what is the opinion of the community? What is the opinion of, well, what is your opinion on the longer term here for the stock market? And I tend to go with the data a little bit, and I think that's just to give me a bit more clarity. I've got a longer term process that goes over a very large cycle, and I tend to believe in the buy side, in the bull side. Now, some people might say, oh, well, that's misguided, this time it's different. Well, the proof's in the pudding a little bit here. So let's go back to 1950 all the way to 2021. Take a look at every single presidential cycle and think about what's happened so far in the markets and think about what's happening right now. So you'll notice year 2, Q1, not very good result. Q2 sucks. Q3, not very good result. But Q4 and year 3, Q1 and Q2 are phenomenal. So I think a lot of bears in the markets right now, which is totally rightfully correct. You know, some of these markets are looking very weak and it's been a good time to be shorting, will need to try to move against that kind of idea or concept at some point, because guess what? We are looking at a much stronger period coming through into the Q4, into the Q1 at the end of the year. And if we see the right setups, if we see a sideways style market similar to previous midterm election kind of years, and then all of a sudden you're breaking out coming into this period, well, I would be using the data and the stats and saying, hey, it might be a little bit more positive than we think. There are some other reasons why we also believe that things like February are going to be all sideways. Remember, the Fed hasn't come out, but what the expectation is here of the interest rate hike is it's unlikely to just be 0.25%. It's most likely going to be a big slam hit. They're going to come out, they're going to say 0.5%, bam. And look at that, take that market. And that is hopefully going to be like a king hit that slows it all down. I think that's probably the most likely scenario here. So let's talk about what happens up to that point. Well, we've always had these stats, and bear with us if you've been watching the videos. I think a lot of people get a lot of value from this. If we have large 2-day rallies to end a month, we usually expect the next month to be incredibly volatile, obviously only ending 30% of the time positive. If we also think about midterm election years, we think about what the stats have told us in the past. They tend to be weak years. They tend to have large pullbacks, but the return the year later is incredibly bullish. In fact, it's 100% of the time so far in history been bullish, and not just a little bit. The average is 32.3%, so incredibly good returns there. And then, of course, if we have a down January, it tends to spill over into February. And you'll notice, look at this final 11 months. They're not exactly, oh yeah, this is fantastic kind of, times. So what is 2022? Possibly the year of the trader and the year of the investor finding key stocks and key sectors and indices at levels that they want to hold over the medium to long term. So this year is going to be exciting, and that's why so many technical traders are feeling so good about it. We also have a usual kind of weakness here in the technology sector that jumps out in March and then turns into a pretty good gain by the end of the year. So I think a lot of that is playing out right now. We're going to the rule book of the data. We're understanding a lot of that. It's one of the big things that I use along with the technical analysis and along with a few other reasons to make better informed decisions and to hopefully give yourself a little bit of a data-based bias that can help you when the TA shows you the correct way. It's always down to the TA showing you, because the market is ultimately the psychology of what's going on right now. Speaking of psychology, the VIX continues to drop here. So we are seeing fear dropping out of the market a little bit. And of course, that's stabilizing the market. At any point in time, this can turn around, and we always know when it'll turn around. If you're a VIX trader, it's pretty simple. If the QQQ makes a new low off yesterday's low, what's going to happen? The VIX is going to spike. And based on our technical analysis, if it closes underneath there, the VIX might spike quite a lot. So if you're a VIX trader, that's probably one of the things you're looking at. 2-year yield, 10-year yield, they continue to basically rise here. We're sitting at 1.342. Now, if we expect the Fed to do a king hit in terms of a big double rate hike and then see what happens with the markets, because we do have a lot of weak economic news coming out, it's going to be tough for the Fed to really say, okay, we're going to get it to 1.342 in the next 2 years. I don't think that that's where it's going to be. I think it's going to be lower. But the market often runs off in an expectation of something. The Fed's kind of down here, maybe. The market's here. They'll eventually meet each other in a happy medium. At least that's what my belief is at this stage. And we'll do a video on that and talk about it a little bit later on. But 1.342, it hasn't turned around, and it isn't showing us the signs, or one of the signs of the 4 signs that we're looking at for a recovery, in terms of we're not really seeing that strong movement down and maybe a lack of fear in the 2-year. 10-year is similar, 1.95, just hit that resistance that we had previously. Will it go through here? Another sign that maybe we're going more bearish could be that this spikes up again, because that's not really good. That is considering some real fear coming back in. Watch this zone incredibly closely on the 10-year. Let's move over to gold. Some hedging coming in on gold. Our trend line's been holding up for a while. Gold has been pretty lackluster, but we got a great entry point in the previous session. So basically we had a daily close and we saw a movement above these potential wicks here. And this is off a double pin bar or double hammer rejection. That's a strong sign here for gold, and it's had a nice little extra rally up. It's hit the first little resistance around that 1830, sold off barely, but I'm kind of confident in gold here. I feel like it's doing the right moves, and if it can get through here just a smidgen, I'm not too concerned about that previous resistance here. I'm thinking 1870 is the way, and it's just the price action is showing it there. It's starting to improve, and when we go over, we know that gold has been in a sideways range for quite some time. So even any weekly that gets up and just holds above this red box here is significant and should allow further bullishness here for gold. It's been artificially held down for quite some time. We know that there's a lot of big short contracts on from the big players out there in the market trying to stop gold and silver from going any better. Another reason why we're kind of looking at gold and saying, well, maybe it's coming back right now, is silver broke through the double bottom, the double rejections, the strong kind of gain above these 2 moving averages, the 20 and the 50. Any pullback here hopefully should be met by buyer demand. And silver's looking better than it has in quite some time, better than it has since over here where it went bullish into our resistance. So next target could be all the way up here around that 24.50. Could be good gains, obviously always risks in the market, but it's there. We won't spend too much time on US oil because it's doing exactly as we expect. It hit our resistance. We've been looking at this thing for months and trading it for the last 2 years, and it's been phenomenal. It hits resistance, it sells off, consolidates. We get back in once we see the price action. We haven't seen that yet. So consider that US oil is probably still going to consolidate a little bit. That 88 is an interesting area, but only for day traders. At this stage, we're looking for the turnaround. Let's move into the stocks. Tesla. Wow. Okay. Coiling. The market is holding through a little range. We get the hanging man here. We get the rejection candle. We get another rejection candle off the 20 moving average. We've clearly got two areas. We've got the 880 support. And then of course, we've got this 945 to 950 resistance. Now we've talked about how many puts are sitting here. I mean, how many calls are sitting in this area. So many calls at 950 and then a ton of calls at 1,000. So if we breach this area, day traders will be looking at instantly taking it to the $1,000, the next kind of level. And this is going to be a very interesting trade should it play out. Because think about it, you've got all these rejection style candles. You've got a 20 moving average. It's been respected a little bit over here. There's a lot of signs saying, okay, if we get past here, good things are happening for Tesla. But if we get past the 880 low, because the problem is we're trading a range here, and that's what day traders are really doing, then we look towards getting back down to that 800. So you've really just got a coiling kind of market here with a tight range or tight-ish range for Tesla. And when it explodes, the great thing about that is Tesla moves hard. So we should be able to see some great day trading action. Continue to watch the points, obviously bring your own system in them. They're just some of the things that we're watching. Now we mentioned jets, and we brought this to everyone's attention over here. And you might think, oh, Tom, it's been crappy since then. Well, has it really? The stock market has fallen off quite considerably. This particular index is actually up, so the sector is up. And that's something that always happens. Yes, you're not susceptible, or you're always susceptible to a general market sell-off, but the market's showing strength here along the lines of jets. And I think when you have a look at this, you've got supports, you've got obviously the resistance, you've got the double bottom, you've got the first sign of recovery, and then you have a interesting kind of interaction down here recently. It came back down, touched the support twice, and bought off it with aggressive buying wicks, and the volume is still quite high, which is one of the reasons why we liked it over here. So we've got this downward trend line. We're basically at the next level of kind of resistance, and some people will be calling this something like a triple bottom, where if it breaches here and it breaches the trend line, well, what do you think? Maybe it's on its rally again. Remember, jets had that massive rally, which I was not convinced by in 2021. This is the first time I'm looking at this, and everybody will know that's been following the channel for a long time. I actually hate this sector. I mean, I really don't like jets, and I don't like trading or investing in any of these things. I don't like airplane companies. They're not for me. But jets at least is a little bit safer because it's a basket of them. The reasons I don't like airplane companies, one falls out of the sky, gets obliterated 25, 30% on the stock price, kind of scares me. Yes, it's statistically unlikely. I don't like those risks. And that's one of the reasons I'm not a big fan. But when you think about it, it's starting to recover. And this idea of sector transactions and sector movement is a big, big game player. I mean, if you were thinking about the difference between 95 and 5% of traders, the main thing is the 5% of traders understand what the big guys do, and they all rotate. And once you start to think about rotation, you will do better. I'll give that as a top tip. If you want to find out more, definitely consider our private mentoring groups, because I go into it in some serious detail, and I think you'll enjoy that. Let's check out Amazon here, and Amazon is rejected and then gone bullish. So a few people probably would have gone into shorts here, and I totally understand why. And this is sometimes the problem with trading an individual stock during a volatile time in comparison to trading an index or a sector, is that they sometimes can give you false signals. There is a clear level here. I mean, there's no doubt that this is support becoming resistance. We saw long leg doji, we saw rejection candle, we saw follow through. Obviously, stops are above here. It'll be incredibly interesting in the next 24 hours. How does it react with this area? Does it bull past and close? Because if it does bull past and close this point, that could be a big sign across all of the markets. Because really what that's saying is, okay, your stop loss is hit for any shorter. we tricked you and we pushed this market down, and then now we've gone bullish and we're maybe out of the woods. And at the same time that that's happening, the SPY is also going to be trying to fill a gap and trying to move back up. So Amazon, we'll look at it. We'll continue to watch this space. If it goes underneath again, gap fill is a certain possibility. And if it goes above, it could be doing it with the rest of the market. Let's put a focus on a few stocks now. Hyper stocks are obviously the discussion point. Some of them are down significantly. This is one, it's SE. It's a pretty cool company. It's obviously in the lines of Amazon. It's been doing incredibly poorly in recent months and dropped significantly. Now they do burn cash. They obviously have problems, but they also have hyper growth. So we have here a bit of a rejection of the 20 moving average. And we've got kind of like this first signs of lightning bolt. And this is across quite a few stocks. Some of my favorites like the cybersecurity kind of stocks. Here we've got Zscaler. We've got a nice trough, peak, higher trough, higher peak. You know, one of the signs of first stage of recovery. Net, very similar. Cloudflare coming into earnings. We've got a trough, peak, higher trough, higher peak. You know, these are the breaks or the sequences that often people look for turnarounds. So some of the markets showing us that it's not a broad-based sell-off. It's mostly through overpriced companies and companies that are susceptible to interest rates. And some of these are really turning. Let's now take a look at the indices. Are we seeing a turn here in IWM? We've talked about the Wyckoff distribution. We cannot ignore the Wyckoff distribution. It's a serious pattern and it took a long time to form. But we've also got some testing of this resistance in the 20 moving average. Daily 20, resistances, less in terms of we've got trough, peak, higher trough. So we don't have as much of a pullback here. Volume is dropping. So I think that's pretty important that we know that volume is dropping. But when we break through, let's say we get through this 205, where's the next logical conclusion, or 204? The next logical conclusion is to go and test the previous supports at around 209, 210. So there could be a trade there if you like it in IWM. I don't particularly like this trade, but it's interesting to see the small caps. Russell did 1.71% in comparison to what some of the actual major indices did. It was small caps really leading through the session. Let's take a look at QQQ here, the Nasdaq, and for anyone that was watching the session, let's take a look at the 15-minute chart because I think that's probably the best thing that we could do. It had a go. It didn't get underneath. So for anyone that was triggering shorts in the morning, try to rethink maybe the way you place orders and you trade in the systems. You must wait for confirmation. It's a huge part of trading. It's boring. It sucks. You sometimes miss opportunities, but realistically, if you were triggering in the morning towards the short, we hit the supports and we bounce straight off them. You'll notice you get that significant candle here where it looks like it's going short, it busts up against that, and the rest of the day was actually bullish. So from the QQQ perspective, it's pretty simple. We still have our support down here at around that 353. If we get underneath that and close, okay, let's move all the way back down. It sounds like we're going to 340 town. But if we go above here and we start to move above 361.50, like we reported in the previous video, this is where we're starting to say, okay, well, let's fill that gap. We're going to fill the gap. We're going to go put pressure on 368, 370 again. And these two trades are really the better trades. Yes, there's trades in here, I'm sure, but the bigger, more explosive trade should come with the breakout of this coiled range. And that's why you look for coils, you be patient, and when those types of things break, they can be quite significant. This is 1, 2, 3, 4 days of basically inside days. Imagine what's going to happen with the VIX above 20 when we go in one direction. It could be quite big. Same goes for the SPY. If you take a look here, it came down, tested the support, bounced back up, and is remaining within two zones. We've got here the 452, and of course to the downside, we've got 445, and we've got a gap fill up to the 457. Now, the thing with the SPY that's really strange is while all of this is going on, people are adding so many options into the market. The options are coming through thick and fast. This week, there's clearly more puts than there is calls. There are just way more puts than calls in the market. And it kind of points towards maybe a stagnation week or more to the bull side from at least the put perspective. But it gets kind of even weirder when we look at the next week because look how many puts are on the third week expiry. This is the most important expiry for options each month. The third week is the one where the bigger orders are. There's huge amounts of put wall at the 420. So we kind of don't expect the market to be able to get underneath that easily. I mean, that's going to be incredibly tough. but look how many there are. So many in comparison to the calls. The market tends not to really like to drop hard when everybody has puts in the market. It's when you least expect it that things occur. So this is why we could be having a bit of a sideways market for February into March. It might actually be a little bit boring here with some explosive day trade moves, and then we get, a significant kind of drop off. So be careful here, because the puts are saying, hey, everyone's bearish still. It's showing you the market that's bearish. If the price action says go down, we go down. But if the price action's going up, I'm not sure if I'd be fearful, because this is kind of saying it probably will from the options market anyway. Let's move over to BTC. Continues to improve. It's done quite well. It hit our red box, tapped it, 46,000 just underneath. It hits that area and of course sells off. Why? Because people would have orders there. Or I've ridden it down to 33,000. I'm scared. I've got to get out of Bitcoin. I'm terrified. Time to get out. And of course, long leg doji and a bearish movement happened immediately. Look, the fight between the bulls and the bears is going to be significant in this red box. If we get through here to the buy, I guess I'm convinced, and many people will be convinced, that this rally has a lot more in it and it's the real deal. This is the fight zone. And the reason why it's such a huge fight zone is because look how long it sat in support. December all the way through into January. 1 month of super touches to the zone. It's not easy to break that without really heavy sentiment. So BTC, that level. Ethereum, very similar. Didn't quite rally to the 3,400 zone, but we've got a long leg doji. And what does that mean? It means indecision. So we've got high, we've got low, we've got open, we've got close. And if we close above here, of course, 3,400 moves. So there will be some nice day trades. If we close below, bad things happen. So we've got some good day trades there on the crypto space. Let's have a look at BTC shorts. It's not like the whales are adding to the orders, so we don't have to worry about them too much. And that's good news, because of course it means that the buyers across the board are whales, probably Wall Street. Everybody's getting inside the crypto markets, and we can feel that change or that shift in people's mentality. It is getting better. Let's move over to the calendar. CPI for Thursday. Maybe that's the catalyst for this week to get out of the coil. We don't have any other big news other than the earnings. So CPI news, 8:30 a.m. just before the market opens, New York time. And of course, that could be the real catalyst here for a nice break of the coil. Get ready. I'm excited. It's going to be super time in the markets over 2022. If you're a trader and investors, of course, you're going to get great opportunity for your medium to long-term thought processes. Remember to subscribe, smash that like button, and we'll see you in the next video. Bye for now.